What's up, traders? So today we're going to talk about some upcoming events that are very, very important and where the market may be going from here. And then on top of that, we're going to look at potential trades for two stocks that I love to trade at basically all time. And we will place that potential trade in the Moomoo platform. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I've been blessed to print enough money from the stock market to be able to retire in my 30s. Now, if you could do me such a huge favor and go ahead and hit the like button, that just helps push this video out to more people, and go ahead and subscribe while you're at it. And do remember that this is not financial advice, nor a recommendation to buy, sell, or hold any equities or options contracts. Now, as always, first things first, I have to give the word of God, and we are going to start with Deuteronomy 8:18 because I always share scriptures that have to do with business, wealth building, or money. All right, and so Deuteronomy 8:18 says, "But remember the Lord your God, for it is He who gives you the ability to produce wealth, and so confirms His covenant, which He swore to your ancestors as it is today." And this verse is basically just saying, don't get too big on yourself. If you are building wealth, it is because of Him, and so you should praise Him on both the good days and the bad, and just don't get too overly confident or cocky on your wealth building journey, because as soon as you can make it, you can also lose it. I remember myself back in, I believe it was 2021, I was making amazing gains while I was trading, and every week I was making more and more and more, and then I had one week where I made $15,000 in a span of that week, and at that time that was my biggest gain ever in a span of a week. And so I was feeling pretty good about myself, and I became overly confident, and I went ahead the very next week and placed some very aggressive trades. Well, long story short is I lost $28,000 in a span of one day. And although I have a lot more resources now than I did in 2021, still losing $28,000 in a span of a day is going to hit anybody. And back then, $28,000 was a lot more to me than it is today. And I think that was God's way of just saying, hey, slow down, chill. We are going to go on this wealth building journey step by step. Quit trying to do things quick. All right, but that is the word for the day. I hope that blesses somebody. And speaking of blessings, there are several people within the Trader Freedom community who are absolutely building wealth step by step. And so let's take a look. All right, so we have Steven here who says great results in August, and you can see that he printed $20,907 from the market in the month of August. And that's amazing, Steven. I don't know if you work a 9 to 5, but you're getting real close to that retirement number here very shortly. And then we have Tyler here who actually says it was not a great August, and he gives some opportunities that he felt that he passed up on or missed out on. But if we look here, we can see he made $8,856 in the month of August. All right, you know, in Trader Freedom we have pretty high standards, and so sometimes maybe an $8,000 gain for the month is not so great, but I believe that is amazing. So shout out to you, Tyler. Then we have Layla, who is a bit newer to trading, and she is new to the community. She said finished the month with $1,748 in profit. So shout out to you, Layla. And my guy Lejo printed $24,567.32 in the month of August. And this is amazing. He's been around $16,000 for the past few months. So I've just constantly seen his improvement and his growth. And that is, I mean, this is crazy. And I know that he is in the process of starting his LLC for trading because he is obviously making too much money. And so there's always money problems on either side of the spectrum. You can either have too little money and that's a money problem, and then you can have too much money and that be a money problem, because we know that Uncle Sam comes in with his hands. All right. So Lejo, shout out to you. Printing $24,000 in a month is crazy. But there is one person within the community who prefers to stay anonymous that has been printing amounts of money that is just crazy. He started in the community maybe about 4 or 5 months ago, and when he initially started, I would see him make a few $100s per day, and then he would make $1,000 per day, then he would make $2,000 per day, and then after that he stopped posting his wins. And so I recently had a private conversation with him because I had absolutely no idea how he was doing currently, and he informed me that he did $87,000 in the month of July, and then let me show you how much he made in the month of August. That's it. That's the number right there. $229,534.61 in the month of August. Now, I'm gonna keep it 100% honest. I personally have never had a single month where I printed over $200,000. And when he shared this information with me, it just absolutely blew my mind, because he came in, he adopted our concepts and our principles and our strategies, and from there he just took off. And so actually during our conversation, he actually owns some real estate, and I told him, hey, to get rid of your tax bill, you might need to buy a hotel at this point because it's clear that he is going to be printing several $million per day. And I'm just overly proud of him, and I'm happy for myself because my main goal when I first started this YouTube channel was to create 100 millionaires before the day I die. And I do believe that he will obviously be my first, but he will be far from my last. And so if you would like to help me reach my goal, I would love to have you come join the Trader Freedom community. Within the community, you'll get access to my actual trades as soon as I enter them. You'll get access to my full framework for trading options via the Trader Freedom course. You'll get access to ask me questions at any given time. And lastly, you'll be within a community of other traders who all have the exact same goal. And so if you would like to join a cool community and help me reach my goal by you reaching your goal, the link is below in the description. We would love to have you. But with that, let's get down to business. Now, first off, we have some pretty big events coming up for the stock market. Tomorrow, we will have the U.S. employment report, which will come out pre-market. And so we will get to see how the market reacts to that. But then next week, we will get PPI on Wednesday and then CPI on Thursday. And so those will be huge reports for the market as they will show us where inflation was for the previous month. And it will give us a better hint as to what the Fed will do during their next meeting later this month. Because as it stands currently, if we go ahead and look at the CME Fed Watch tool, we can see that we have about 12 days till the next FOMC meeting. And if we scroll down, we can see that there is currently a 97% chance that they cut rates at this upcoming meeting. All right, so because of this, we already kind of have a rate cut already priced into the market. And so hopefully we don't get any horrible surprises, because that would probably result in a nice sell-off because it would lower the chances that the Fed would cut rates later this month. But if we look at where the S&P 500 is currently, we can see that SPY is currently around 647. And I have said in previous videos that I believe that the price target for the end of the year will be around 660. All right, so we are getting closer to that number, but obviously a lot of that will be determined by what happens later on this month. And we are currently in September, which is historically the worst month of the year for the stock market. And so I wouldn't be surprised if we possibly got a slight little pullback, but even if we did, I think we would bounce right off of this 632 level, which is the current 50-day moving average. All right, I can't foresee a huge drawdown here in the near-term futures simply because all of our US companies, our largest US companies, are doing amazingly well. So outside of some unforeseen huge risk in the macro environment, I think that we are heading higher by the end of the year. Now, I want to tell you about two stocks that I typically am trading at all times, whether we're in a bull or a bear market. And the first one is BITX. So BITX is a leveraged ETF to Bitcoin. And so it moves 2 times the move of Bitcoin every single day. And so for example, if Bitcoin moves up 1% for the day, then BITX will move up 2% for the day. And the same works in reverse. If Bitcoin were to move down 1% for the day, then BITX would move down 2% for the day. And the reason I love trading leveraged ETFs is because they are great for short-term trades because they have more premium to them because they are a little bit more volatile. All right. And so leveraged ETFs are amazing for short-term trades. However, they are not so great for longer-term trades or buy and hold strategies because typically over long periods of time, they will always lag whatever stock or sector that they are following because they are rebalanced every single day and then the fees on top of that. However, when it comes to short-term trading, which is all I use it for, it is pretty amazing. And so looking at BITX, we can see that it has about $2.5 billion of assets under management. So it is a decent sized ETF. It has a dividend yield of about 10%. And if we look down here, the implied volatility is 73%, which is pretty high. All right. And so BITX always has some pretty good premiums. And over the long term, I do believe that Bitcoin will continue to go higher, especially since the current administration is going to continue to do as much as they can to make cryptocurrency a more useful item in our day-to-day lives. And so I love to utilize especially red days like this in order to collect more premium. So let's go ahead into the Moomoo platform and look at a potential trade. But first I have to give a huge shout out to the sponsors of this video, Moomoo. Now, beyond just being an amazing brokerage and one that has tools way better than most brokerages that I know, right now they have one of the most amazing sign-up offers as well. When you open up an account using the link below in the description, not only can you get up to $1,000 of NVDA stock, but you can also get up to an 8.1% APY on your idle funds. And that is just crazy. But what was just added, they added in an additional $100 cash reward. When you open up an account using my link below in the description, you will not find this anywhere else. So make sure that you take advantage of this. But on top of all of that, their mobile platform is next level. Taking a look at their mobile app, So you can see here, you can see a lot of general information such as earnings and earnings calendars and earnings beats and economic calendars. However, what I like most is this investment theme. So if we click on investment themes, here they categorize stocks based on what they're impacted by. And so what I like most is this one that's called Nancy Pelosi Portfolio. Now, if you're not familiar, Nancy Pelosi is a US Congresswoman, and she seems to always select the right stocks right at the right time. And so Mumu conveniently put all the stocks that she is currently investing in right here on this list for you to see. And so if you just wanted to follow what Nancy Pelosi is doing, you could follow this investment theme in Mumu. But go ahead, check it out. The link is below in the description. You can get up to 60 free stocks, and you can only get that with this link. So go ahead and click it, and you can thank me later. And so here we are looking at the chart, and we can see I have the Bollinger Bands pulled up, which are these white lines here, and it just aims to show you the price range that a stock is expected to trade within. All right, and so we can see that BITX is currently near the bottom of the Bollinger Band range. And so about 95% of the time, the Bollinger Band range is pretty accurate. You can see anytime that it has popped out of it, it will pop back in. Even if we go to the upside, when it popped out, it comes right back in. And usually that happens typically within a few days at max. All right, and so we are currently at the bottom of this range, and we can see even at the bottom of this Bollinger Band, it would have it right around this $50 level. And so I could generally assume that even if it goes below 50, that sometime in the near future, it could see a pop back up. And so we'll keep that $50 mark in mind, but let's go ahead and look at some other data points. And something cool I like on Moomoo is they have this trend projection tool that basically uses AI to find another stock whose chart looks pretty similar to the one that you're looking at, and it will analyze the stock and show you what that stock did thereafter, and then whatever stock you were looking at will possibly do here in the future. And so let's go ahead and select the trend projection. All right, so it says that the chart is pretty similar to ticker symbol IBOC, and we can see from here IBOC went up, went down, and then kind of consolidated. And so it's showing the same thing here. It may go up, go down a little bit, then consolidate. All right, and so I wouldn't make any actual decisions just off of this trend projection alone. However, it is a pretty cool tool to look at. All right, but let's go ahead to the options chain. Now, next thing I need to do is select my expiration date. If you're familiar with the channel, you know I always go within 45 days. And so that doesn't mean you have to go out to 45 days. You can pick any date that's within 45 days. So I could pick this 8 days, 15 days, 22, 29, totally up to you, but I always go within 45 days. And so for this example, let's go ahead and select this date that is 29 days out from now. And the next thing that I want to pay attention to is the expected move. Now the expected move can be found right over here. It says EM plus or minus $8.41. And so that is the maximum move that the options market is currently pricing in for this stock for this specific date. And so they're saying the maximum move would be an upwards move of $8.41 or a downward move of $8.41. And so I typically like to be somewhere around the $8.41 move. All right, and so if we go ahead and we subtract the $8.41 from the current stock price of $52.55, then that would put us around the $44 mark. Now, that is obviously well below where the Bollinger Bands currently set. All right, and typically when there is a drastic difference, I will usually go with whichever one is a little bit more conservative. And so I'm going to go more so off of the expected move. And so since it's saying about $44, I'm going to come over here to this $45 strike, which is currently paying an amazing premium. All right, so this $45 strike will pay us anywhere between $1.61 to $1.80. Now, of course, all contracts are worth 100 shares, so we'll times that by 100. And so up front, we would receive $161 to $180 right here, right now. Okay, and all we're doing is we are agreeing to buy the shares of BITX if the stock price, which is currently at $52, drops below our strike, which is currently $45, by the expiration date. Okay, and moving forward from here, if the stock price just stays the same, we keep the money and we go about our day. If the stock price goes up, we keep the money and go about our day. If the stock price comes down some, we keep the money and we go about our day. However, if it were to drop below our strike price of $45, then we have agreed to buy at least 100 shares of the stock per contract that we have. All right, now the key to this is doing this strategy on a stock that you would really like to own at the price that you would really like to own it at. Because in that situation, you either get paid to wait around and nothing happens, or you get paid to wait around and to buy shares of a stock that you really, really like at the price that you selected. And so because of that, I absolutely do not care about the day-to-day movements of a stock after I've entered into a trade. If it goes up, I don't care. If it stays the same, I don't care. If it goes down, I don't care, because I am fine with either of the results. All right, so let's go ahead and select the bid price, and then Moomoo will automatically load our ticket for us. And then from here, we just need to select however many contracts we would like to do. And let's say for those examples of this video, we'll do about 5 contracts. Now, however many contracts you do is going to be up to 1, your account balance, and 2, your risk tolerance for this specific trade. All right, so don't blindly follow me. This is not financial advice, nor am I entering into this exact trade right at this moment. If you are in the community, then you know exactly how I am trading it currently. All right, so now we have that set, and we can see for this trade, we will make about $852 right here, right now. And it will show you a max loss of $21,647. But that max loss just shows you what would happen if the stock were to go to 0 while we were in this trade. And so obviously no one thinks that Bitcoin is going to 0 within the next 29 days. And so I think we are safe on that. But if we come up here and we look at the P&L curve, we can see that BITX's price is way over here at $52. And we can see, looking up here at this expiration P&L, that if it goes up, we keep the 852. If it stays the same, we keep the 852. If the stock price goes down some, we keep the 852. However, if it starts to go below our strike price of $45, well, you can see as I slowly move it, we'll make less and less and less and less. And then our break even is right here at this blue dot, $43.29. All right. Now, if the stock price were to go below that, well, then we would start to lose money on the trade. All right, so you can see how we'll start to lose more money. However, we wouldn't care because we were fine with purchasing the shares at that strike price. Okay, and once we actually own the shares, then we could turn around and sell covered calls, which will complete the wheel strategy. But that is a strategy for another video. With that being said, let's go discuss the second stock, which is ticker symbol TQQQ. All right, so now we're looking at TQQQ, and you can see that it is up nearly 2% today, and is currently at $90. Now, this is a triple leverage ETF to the NASDAQ 100, and so it moves about 3 times the move of ticker symbol QQQ. And so you can see that this one has over $27 billion of assets under management, currently has about a 1% dividend yield, and its implied volatility is about 48%. And so not nearly as much implied volatility and premiums as BITX. However, TQQQ should be a lot more stable than Bitcoin by itself because it follows the NASDAQ 100. So let's go ahead and head back over to Mumu. All right, so looking at the Bollinger Bands for TQQQ, we can see that it's currently right in the middle of the Bollinger Band. And so it's right there at that 20-day moving average. All right, the middle line is the 20-day moving average within the Bollinger Band. And so, of course, our next level of support would be that lower bottom Bollinger Band number. And so that will put us right around the $86 mark. And so now that we have that number in mind, let's go ahead and look at our other data points. All right, so next thing we need to do is select our expiration date. Now let's just go ahead and stick with the same expiration date that we used for our past trade. So I'll come over here to this date that is 29 days out from now. And if we come over here and look at the expected move, it's plus or minus $9.07. And so we could just say that's about $10 on either side. And so I would probably want to come down a little bit, and I would probably go right here to this $80 strike that is currently paying anywhere between $200 and $205 and has a delta of 0.20. So we have about an 80% probability of profit. And so I like that. I would go ahead and select that. Now with TQQQ specifically, I love to do short strangles on it. All right. And a short strangle is where you sell a put and sell a call for the exact same expiration date. And your goal with that is just for the stock price to stay in between the strikes that you set. Now, in order to do a short strangle, you one need to be approved for the top level of options in order to put on the trade. Otherwise, you would need to turn this into like an iron condor. But if we were to do a short strangle, I would just come down here and now I need to select my call strike. And since the expected move is about $10, then I would probably come down here to this $100 strike. All right. And I typically like to stay under a delta of about 0.20. And so we can see this $100 strike is at a delta of 0.22. So maybe I'll go down one notch to this $101 strike that'll pay me anywhere between $105 to $109 right here, right now. Let me go ahead and add that to my ticket. All right, and that looks good to me. I would receive about $309 per contract that I put on. Now, when you are doing a short strangle, make sure you understand all the risk. All right, when we are selling a put, we are agreeing to buy shares at that price. But when we sell a call, we are agreeing to sell shares at that price. And so since we don't have the shares of TQQQ currently, that is why it's considered a short strangle, because we are short the shares. We don't have them. And so what I like to do with this is if I see the stock price moving up and threatening my call strike, then I will just go ahead and buy the 100 shares of the stock to make the position covered. All right, and the reason that I typically like to do this on TQQQ and not very many other stocks is because TQQQ follows the NASDAQ 100. And so typically I don't need to worry about this stock having like an earnings or some news that makes it go up like 20% in a single day. All right, typically if it's going to move up, it's going to be nice and slow, and you'll be able to see in enough time in order to buy 100 shares if need be. Okay, but definitely make sure that you understand all the risks of doing a short strangle. But other than that, I will take profit anywhere between 50 to 80%. And yes, you can close either leg by themselves. You don't have to close both legs at once. And if the stock price goes down and threatens my put strike, then I will go ahead and take the assignment of the shares and start doing covered calls on it. And if the stock price were to rise, then I will go ahead and buy the 100 shares in order to make the position covered. All right, but that is it for this video. Let me know down in the description below if you are trading either of these stocks. Make sure to get your free NVDA shares via the link below for Moomoo. And lastly, come join a cool community if you're looking to print money with us. But that is it for this video. I will see you guys on the next one. Peace!